Hi, this is Suzanne Long, Professor of Accounting with Jackson College. Today we're going to be doing bank reconciliations. So this would show up when you're studying cash and internal controls and looking at the cash account in particular. Bank reconciliation is a key part of a good internal control process for any company. You want to know what's going on with your cash, right? For sure. So this is one of the hallmarks of a good system and something in the accounting world that we all do. So it's also something to consider for yourself personally, and I'd love to come back to that, at the end today. What are you doing with your personal banking? Let's do a little something with that at the end. All right, so we're going to get started with one of two practice problems. The first practice problem is laid out with, here we've got 1 through 7 information, and we're going to do a bank reconciliation and the journal entries that are related to that bank reconciliation. The second problem that we're going to do is more complex, and it's based on the actual source documents, so it's more realistic. This is a good kind of opener. This is a good kind of warm-up bank reconciliation problem. So what we're going to do is we're going to build a bank rec, and I want to show you the format. The format is left to right with a header. Always have a heading for your reports and your schedules, the name of the company, the name of what you're doing, and the date of what you're doing. And we've got bank on the left, cash balance per bank as of, when was this one? Oh, this was July 31st. And then we're going to have cash balance per books or per ledger. So however you want to say that. But this is according to the business. So at the end of the month, what does the bank say we have? At the end of the month, what do we say that we have? So cash balance per bank, I see that right here. 247880. Okay, let's get that in there. Oh, remember when it does that with the number signs, the hashtags? That just means we need to open it up a little bit. It means it's a little smushed. So if I smush it back, there we go. At any rate, when you get those number signs, just make your column a little bit bigger. Cash balance per books, right here, 2219. Notice that I'm out in the rightmost column. And this problem has some dollars and cents in it, so I'm going to use 2 decimal places. For your accounting work, I recommend either 1 decimal place or 2, and that's about it. So with these two, what do we want to do to show that we've taken care of those? Maybe a color, maybe a background color. Let's make the actual text a different color. There. So we're done with those two. So this means it's the end of the month, and we looked at the bank statement, and that's what the bank says we have. It's the end of the month, it should say cash, and we go to the ledger account, we're like, hey, how much have we got in cash? And that's how much we say, the business says we have. So we see, there's a difference here, right? So why? What's up with the difference? So we're going to have an add and a subtract section. Add, and I'm not exactly sure on the spacing here, but something like that. And over here we're going to have the same thing, add and subtract. And then we're going to end up with adjusted bank balance and adjusted book balance. Hey, let's just copy that. So when we get done, we're going to have the same number here, same number here. So a bank reconciliation is like a trial balance or a balance sheet in the sense that it's a self-checking document. When it works, it agrees, it reconciles. So that's the format of a bank reconciliation. Header, opening balances or before, you could say before balances, before we do the bank reconciliation, and add in a less section, and then your adjusted balances at the end. All right, let's see what we got. Number 3, or the third bullet, says these checks were recorded but did not appear on the bank statement. Okay, so this means that the business recorded these checks. They did their thing, they wrote their checks, they sent them out in the mail, but they haven't made it all the way back through the banking system to be recorded by our bank as subtractions. So those are called outstanding checks. It's already recorded in this number. It's in the books number. So if we go and look at the ledger account, we can see subtractions for check 186, decrease for 100, decrease for 57, decrease. It's already included in this number, but it's not included in this number yet. The bank hasn't recorded it yet. So it's already been subtracted here. It hasn't been subtracted here, so we're going to subtract it right now. So it was 100, 57, and 143. 100, 57, 143. Yep, okay, I got those all right. Outstanding checks. You could add some more detail here, check numbers. I'm just going to leave it simple. Okay, we did that one. Fourth bullet, a deposit for $368 dated July 30 recorded in the ledger but hasn't shown up on the bank statement yet. So this is the same kind of thing. This means in our number, in the books number, we've recorded a deposit. And I don't know if you've ever had this happen to you, but sometimes if you go to the bank, you'll notice a little sign, like if you're making a deposit today, it's not really going to show up in your account until tomorrow or Monday or after a holiday weekend or whatever. So that's what's going on here. Deposit, very last day of the month, July 30, we've got a plus, we've got an increase in the cash account for that deposit amount, but that plus, that increase hasn't shown up here yet, so we need to add it. And this is called a deposit in transit. And it was $368. Yep, $368. Okay, so we're good there. Now, notice that I'm using this left side area. So I'm going to have my detail here and my totals on the right. Don't worry, we're going to get some stuff over here too. Okay, fifth bullet, service charge shown on bank statement. Okay, so according to the bank, they've already subtracted the service charge, but we haven't subtracted the service charge yet. So this $18 subtraction or decrease is already here, but it's not here. So we gotta get that in. Service charges, or bank service charges would be even better, and that was 18. So now that service charge of $18 has been decreased out of this number, and now we're going to decrease it out of this number. So this whole bank rec thing is like settling up apples and apples. Whatever's happened on the one side, we need to show it happening on the other side also. And these reconciling items are those things that they're in the one, but they're not in the other until we do the bank reconciliation, and then we can see it all. We can see it all shake out. Okay, sixth one is special. This is a bonus. This is like your wild card. I want you to just read that and tell me what you think about number 6. What I want you to see is that somebody screwed something up. This is an error. And I think I might want to have some little notes over here. The correct amount was $37.50. The wrong amount was $375.50. I think. Yeah, $375.50. $37.50 correct. $375.50 incorrect. Okay, so what's the difference? I just want the difference between the two numbers. Okay. So an even 338, and if you wanted to, you know, really see, 338. Now, we got to think about like what happened with this error. Let me shrink this just a bit. Yeah, because I'd like you to be able to still read the description of the error, but also be able to see the notes on the error. So this is books. This is the business. The business decreased 375. Decreased too much. Right? The business subtracted $375.50. Wrong. They should have only decreased $37.50. So we need to add back. So it helps to have some kind of little scribbly notes on these errors, just to get your thinking straight. Okay, what was it supposed to be? Yeah, okay, and what did we do? And okay, what's the difference? And all right, and then maybe some kind of dialogue or words on what's going on. So we subtracted too much. We need to add back that difference of 338. So this is us, this is we, this is the books. We need to add back this error. Error, and ideally we'd be able to say error on check number 532, you know, or whatever the check is. We don't have that. Let me just make it a little fancier. Ledger error 338. Now right here you might have that formula if you hadn't already done it. Oops. So let me try that again. Equals 375.50 minus 37.50. We're adding back that error. We subtracted too much. So anytime you got an error, it's a time out. This is going to take more thought process, because it could be a bank error. The bank could have screwed something up, or it could be us. It could be a book error and we screwed something up. And when you're fixing your error, it can go either way. So it could be an add or a subtract. So most of these things, like deposit and transit, is always bank, it's always add. Outstanding check, always bank, always less. Service charges, always books, always less. But the errors, I call the errors a wild card, because they could be in any section of the bank reconciliation. So you really have to analyze carefully. I definitely recommend a little bit of documentation just to sort through your thought process on each error. Okay, last one, number 7, interest. All right, nice. So we got a little bit of interest. Yay. Not much. So this is realistic. $7.80. And I can check that one off. Super. Now in terms of appearance, I'm going to shift this down. You don't have to do that. And then I'm going to want to make that gray again. Just playing around with how it looks. How it looks. Okay, we've got all of our reconciling items in there. Now we're going to do the totals. And this is the drum roll. You know, did it come out right or not? So for this section, this is a section, I want a total. You could do auto sum, you could enter it, you could do whatever. For this section, I want a total. And then at the bottom, I'm going to have equals where I started before reconciling, plus my add section, subtract my decrease section. So 254680. So we're going to hope that this is also 254680. Okay, same thing here. What's my section total right here? And what's my section total right here? And equals before we reconciled, plus, minus. Whew! See, and we got our same reconciled balance. Fabulous. Now, we're not done. We've got the bank reconciliation. We did most of the work, but now we're going to take a look at what are the journal entries that we need to make to make these changes to cash. So right now cash is sitting in the ledger at 2219 and we need to make these changes to get it to 2546.80. So I see 1, 2, 3 pieces over here, 2 adds and 1 subtract that need to be recorded. So we're going to have 3 journal entries. 1, 2, 3 journal entries to get the cash account all up to date. This was July 31st. And the first one is this error, so we're adding to cash, increase cash. And I'm going to use a cell reference. And I'm going to use a cell reference. Now, why? What was going on with this error? So I got to go back and look at the error. It was something about, yeah, office supplies. So what happened before is we debited office supplies and credited cash for too much, and now we're fixing both accounts. So this these are all going to be kind of a twofer where, yeah, we need to fix cash, but yeah, we need to fix office supplies also. Next one. So that one's done. Now we need to do interest. Okay, this was also an increase to cash. I'm going to do cell reference again. Oh, see how it chopped me off? Yeah, I need to make this 2. There we go, 2 decimal places. Okay, cash and why? Why did we have an increase to cash? Well, because of interest. So it just depends on the business if they call it interest income or interest revenue. I'm going to just stick with interest income. You just want to check the chart of accounts, but either one would work. Interest income, interest revenue, something like that. Okay, so we got that one and that. Now we need to take care of this one for service charges. This is a less or a subtraction, a decrease to cash. So we're going to want cash down here. And this is for $18. And why? For bank service charges. And again, you just want to check and see what wording is preferred for your company, what's in your chart of accounts. Our AME textbook says bank charges expense. So we've got these 3 items that affected the cash balance, and now we've made those changes to cash. So we're good. We're done. We're set with this problem. So problem AP2B, we're good. We got the bank rec, we balance, we've got our 3 cash accounts, we're all set. Very nice. Now, let's take a look at what happens if you've got a different kind of problem where they didn't give you the information like this. This is more what I call the silver platter bank reconciliation. Like, here you go, here's all the information you need. And this is more realistic. When you're actually out working, you would go and pull up your general ledger and see what's going on with cash. And we see, okay, well, we say cash is $76.53. And then you get the bank statement in your email box, probably, maybe in the mail, but probably through your email. And so you open up the bank statement and it's like, well, the bank says, what? Huh? It says we have $2,000? I thought we had $7,000. Bank says we have, oh, this is going to be an interesting bank reconciliation for this, for this month. Let's see what's going on here. So the, the format of a bank reconciliation is the same, and yep, we need to record any journal entries to clean up that cash account. But otherwise, we need to really closely consider the differences between what we've got recorded in the ledger for the business and what the bank's recording over here. So let's get this set up. Cash balance per bank as of, this is April. And cash balance per books as of April. And again, this is the end of the month, but before we did the bank reconciliation. So balance per bank, we want the bank statement, and they say 2115. Balance per books, we want the ledger, and we say 7653. Alright, so that's where we're going to start. Add, I don't know how far down we want to go, but we'll see. And an add and a less section. And then when we get all done, we're going to have that. I think I want to copy these. Adjusted bank balance and adjusted book balance. Now the only thing I need to change for this company is we're doing April. And April. Okay. Now we can have at it and start working. So I'm comparing and contrasting. Notice the opening balance is the same. Okay. And it should be. That means that we did our bank reconciliation correctly the last time around. That means that our cash account was adjusted properly. Let's look at check 101, 500. Check 101, 500. Yep, that one's good. So I'm doing this blue stuff to show, yep, that agrees. 8,000 agrees. 500 agrees. We're good so far. 102, 1,000, 102, 1,000. And notice this is credit for decrease, credit, decrease, and this is saying withdrawal on the bank statement. So those are fine. What's next? Mary Maloney debit increase 250. Mary Maloney deposit. Yep. Okay. Notice we skipped one. Okay. Alright. So those agree. So I'm working here through the ledger. The next one is 103 subtract 757. 103. Oh. Look at that. 757 versus 575. Okay, so maybe we'll put that in red. Like, uh-oh, got an error. Somebody somehow made an error. Okay, keep going. 104, 840. 104, there is no 104. Okay, so we can't check that off. Deposit, 2,500. Oh boy. Boy, we're done. So that's it for blue. That's it for things that agree. Look at all these differences. That's a lot of differences, right? Looks like we have just about as many differences as we have blue, agreements. So we can start working through these however you like. I'm just going to stick with the ledger, and let's, why don't we just take the hardest one first, this error. So we've got this error. Inner beauty check 103757. But the actual check, and generally the bank statement is going to be right in a case like this because they have the check in front of them, so they can see the check. So if you look at the check, it says 575. This would be like somebody wrote a check, like literally with their hand, wrote out 575, but then when it got keyed into the computer, somebody typed in the reverse. So we're going to say 575 is correct. I don't want all that, but I don't know that I want to take the time to fix it right now either. So correct amount, 575, incorrect amount, 757. What's the difference? So the difference between those two amounts is 182. And then you got to look at who did what. Oh, this is just like the other one. I wish this was a different kind of error, but it's like the one we just did. The books, us, books decreased 757, should have decreased 575. We decreased too much. We need to add back. So it's the same, the error is going in the same direction as the one we just did up here. That's why I'm like, oh man, I wish it was a different kind of error. Okay, so we need to add back books. We need to add back error on, see now we have the check number. This is better. 103, this is a better problem all the way around. It was 182. So you could type 182 or you could do the formula. My mouth did not work for a minute. So that takes care of that one. Maybe I'll put a little X here. So I've recorded that one. Blue, this is getting crazy, right? Blue meant it agreed. Agreed, agreed. X means I took care of this difference right here. And I want a little X right here too. Okay, next one. Shona, 104, 840. Okay, this is the 19th. So it should be down here. And it's not showing up. So this means that the books wrote a check, but it hasn't made it through the banking system yet. You know, we wrote a check to Shona, we sent it to them, and then maybe they sat on it, who knows, for a week or two, and then they took it to their bank, and then their bank's got to get it to our bank. That takes some time. So this check is outstanding. We recorded it, we subtracted it. It's part of our subtraction, you know, credit, subtract to get to 76.53. But the bank hasn't recorded it yet. So remember, that's called an outstanding check. And let's go ahead and make this really complete. Check 104. That was for 840. Okay, so we can check that off. Deposit. Oh, see, this is probably the biggest of the differences in terms of why we think we have more than they say we have. Because we got this deposit right at the end of the month. So you're always looking for one of those. So we've got another deposit in transit. We made a deposit. But it hasn't been recorded officially by the bank yet. So April 29 deposit, and they're like, yeah, it's Friday, it's not going to show up till Monday, you know, May 1st or whatever that is. And so we got a deposit in transit. You could even add the date, you know, a little extra, like that's specifically what it was. Okay, so that takes care of the ledger. We've either agreed everything or we've recorded. So we've got that error, outstanding check, deposit, and transit. Okay, let's come over to the bank statement and start chipping away. Okay, first thing I see is this EFT. If you don't know EFT is electronic funds transfer. So like most of my own Suzanne bill paying is electronic funds transfer. You know, my mortgage payment, I've signed, you know, a piece of paper that says, yeah, just take it out of my checking account. My car insurance, my, you know, all that stuff, electronic funds transfer. So that's what this is. So the bank, you know, subtracted 800, but we haven't recorded that 800 yet. So that's going to be a less, right? We need to record this. The bank subtracted 800, now we need to subtract 800. So that's going to be, I mean, 800, you know, it's not that much, but, you know, we're looking at this difference, that's a big chunk of that difference. Okay, NSF check. If you don't know what NSF means, NSF is non-sufficient funds, which is like a bad check. So this would be like I wrote a check, but there wasn't any money in there for that check, so the check is going to bounce. That's a non-sufficient funds check. So what this means is we've got a customer that paid us and we deposited. We're like, yay, the customer paid us. And then the bank's like, yeah, boo, no, because it was a bad check. So we thought, and we already did deposit this $250, and now the bank is saying, yeah, we're going to withdraw this $250 because it was a bad check. There was no money there to back up the check. And there's a fee that goes along with it. Now this fee is ridiculous. $5, no, it'd probably be more like $50 for an NSF check. So we got to record these two things. They're withdrawals, they were subtractions in the bank balance. Now we need to subtract them out of our balance. So we're going to have NSF check, 250, and NSF bank charge, 5 on 5. Oh my gosh, $5, come on. Okay, now the next one, this check 103,575, we already took care of that. That relates to, in red, the error, and we've got the error recorded right there. The next one is check 1521. And what I want you to see is, well, what do you think about that? I want your inner auditor to shine right now and go, hey man, that doesn't look right. What is the deal with this check number? Pause. Do you see that this check number does not match up with this business at all? It's like they just opened a new pack of brand new checks, you know, and they're going 101, 102, 103, 104. 1520? What? So this looks like a bank error, and this particular problem doesn't have other stuff in it, but this looks like some other company's check. So the bank took out $3,000 and they shouldn't have taken out $3,000. It's another big reason for this difference. So we've got another error, but it's not a difference kind of error. So there isn't anything to put over here. This is just a bank screwed up kind of error. So the bank subtracted $3,000 and they shouldn't have subtracted $3,000. So we need to add it back. Wrong, oh boy, how could we say this? Wrong check from another company, something like that. But I want it to fit in there. Okay. Okay, that takes care of that one. Service charge, oh, these are going to be easy, right? Service charges, so service charges and interest are pretty much always going to see that on a bank statement. So service charge, the bank subtracted 25, now we need to subtract 25. Okay, and interest, bank gave us, we earned a little bit of interest. We need to record a little bit of interest. So those little items, you know, those are common and they're small. You kind of expect to see that. Okay, so we have analyzed every little thing on the ledger and on the bank statement. We've got a couple of little notes over here. We are looking good. So now it's time to do some totaling and see where we're at with everything. Okay, so add section. What's my total for the add section? What's my total for my subtract section? What's my total? Before, plus the adds, subtract the deducts, and 6775. All right, let's do the same thing over here. Total for the adds, total for the deducts, and final equals before, plus, minus. And there's our 6775. Woohoo! We balance out, we reconcile, yes. Now, if you don't balance out, if you don't reconcile, check your human error first. Did you type 2215 instead of 2115, that kind of thing? Did you type 200 instead of 20? Check that kind of stuff. And then go back through, do you have things in the right places? Are your totals working? All that good stuff. Okay? In the home stretch, the last thing to do is to journalize these changes to cash. Right now cash is at 7653 and it needs to be at 6775. We've got 1, 2, 3, 4, 5, 6 journal entries. I think I might combine those two and just have one journal entry for the charge. Okay. First one, error. we need to add. We're adding to cash. Adding to cash. Adding to cash. 182. Why are we adding to cash? Error on 103. Inner beauty check. You know, let me, it was salon supplies. I need to add that over here. Check 103 is for salon supplies. So kind of like the one we did above. So when we're correcting this error, we're going to hit salon supplies, kind of like office supplies. And again, you would check, you know, specifically that if we had, you know, if this was real world, you would go to the chart of accounts for this company and see, you know, did they call this supplies? Do they call it salon supplies? What's their account title for this current asset, this supplies account? Alright, that takes care of this one. Now we're going to do interest. Okay, we already did interest up here. I'm just going to copy it. There's interest. Cell reference, cell reference. Okay, so we got our two adds, two debits to cash. Good, good, good. Okay, now we've got a couple of deductions or decreases to cash. The first one is rent expense. Okay, we know rent expense, no sweat, and cash. And get that 800 in there. Next one, NSF check, decrease cash, right? We're decreasing cash. We know this is going to be $250. Now, I want you to think about this for a second. This is a naughty customer that sent us a check for 250 bucks and the check bounced. It was a bad check. What do we do next? I'm not happy with this customer, are you? We're like, hey man, you sent us a bad check. What's the deal? So NSF check, bad check. We got a check from a customer and we deposited their $250 check, boom, 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 doing business, making deposits. And then what? We get this bank statement and the bank's telling us, hey, it's a bad check. Okay, we're not happy with the customer. I want you to see what's going on here. We're not happy with the customer. So we're going to go back to the customer, right? We're going to call them up. Be like, hey, you owe us $250. And guess what? This time, I think I'm taking a cashier's check or something. So this has to go back into accounts receivable. You know, we're going to go back to that customer and be like, hey, you need to pay us $250. We are still waiting to receive $250 actual dollars from you. So this goes back into accounts receivable. Okay, that takes care of the $250. And then we've got these bank charges. Now, you could do those separately or together. I think I'm just going to do it all in one shot. We had one of these up here, bank charges expense. Yeah, let's just do it like that. So right here, it's going to be the 5 and the 25, of course, 30. And then we've got our credits in there. So 182.20, increase cash. Yep. 800, 250, 30, 800, 250, 30 decreases to cash. So yep, now our, what do you want to say? What do I want to say here? Now our journal entries are all set for the bank reconciliation. Good stuff. So two different types of problem. The only thing that wasn't quite right is that the errors were kind of too similar, and I wanted to talk a little bit about personal banking as we close up. Back in the day, I used to receive a paper, actually let me look at this one. I used to receive a paper bank statement in the mail. This is me personally, and I would, you know, very faithfully go through that bank statement and I would check everything off, you know, with a pencil or a pen. You know, I would go through each and everything on that bank statement and make sure it agreed with my own checkbook. And I kept a checkbook, which would have been like this, you know, so I had a checkbook, like, in, you know, little entries, you know, oh, I had my paycheck deposited, write that down, and oh, I paid my mortgage today, and oh, I went to Polly's and bought groceries, and so it was all in the checkbook, nice and neat, and I had the two things to compare, just like this. My checkbook, bank statement, it was all on paper, and I would check things off. Okay, well, now it took me a while, and it was sort of painful intellectually. I don't know, in my head it was sort of painful to let go of all that. There was a sense of control for me in having all that on paper, and now what I do is totally different, and I'm cool with it. I'm fine. So now what I do, and I do it more regularly, which is better. So before this whole paper thing that I was so happy with was once a month when I got the bank statement. Now what I do is once a week, I go and I open up my bank website, and I go and look at what happened to my checking account during the past week. And I look at it and I go, yep, I got gas at Wesco, and yep, I went to Polly's, and yeah, oh yeah, we went to Menards, that was a big one. And I see it all, and I'm verifying. I'm not checking things off on paper, but I'm checking things off by looking at it. And I'm doing it much more frequently. Some people do this on their phone multiple times a day. I would say once a week minimum would be my suggestion to you. And I also keep a notebook, and once a week I have this page in a notebook, and this is my this is my ode to how old I am and how much I like writing things down. But I have this notebook, and every week I go through my stuff, and I have this sort of process that I go through. So I go through my cash accounts, I go through my credit card accounts, I go through anything that's, like maybe I went to Kohl's. Well, I haven't done this in a while, but when the kids were in school, I went to Kohl's, back to school shopping, so I've got this big Kohl's charge card balance I'm paying off or something like that. If there's any, I just go through everything that's going on. In particular, I keep a really close eye on what I owe. What are those credit card balances, and how am I doing with that? So I have this sort of little process I go through on one sheet of paper in a little cheapo dollar store notebook, spiral notebook. And then at the bottom, then I look at what's coming up, like what's coming up in the next week or before the next paycheck. And I just make sure everything's all right. And then if there's something special going on, I document that too. Like, oh, I'm making a transfer from this account to this account, or I decided to go ahead and pay off, my car a little early. It was getting close, so I just called them up and paid it off, or whatever. If there's anything sort of unusual, then that gets in there too. And that's been very helpful. The combination of checking once a week online, in fact, that's something I'm going to do today actually, and then having that notebook where I'm kind of tracking things and documenting if something kind of weird is going on. So that's it for today for us for bank reconciliations and a little bit of cash management. A lot of students find the bank reconciliation a little awkward and challenging. It makes sense to me. It was for me when I was first learning these when I was in school. So the key is to practice. You want to practice a couple of bank reconciliations so you kind of get a sense of what you're doing, how to do it, and also the why you're doing it. Hey, nice work today. Talk to you soon.